This is the tool that I use for all of my long-term real estate investing deals, and it's helped me feel a lot more confident about wanting to actually buy a property, knowing that it'll work out well. And that's one of the best things about real estate, is that you can look beforehand and see how well that property will perform, or have a pretty good understanding if you've done some good due diligence and you understand your expenses and your rents. I see a lot of people going to try to buy real estate and they don't understand that you don't just receive rent and then there's a mortgage and then the rest is profit. There are a lot of expenses, which I detail on my spreadsheet right here, that we're going to run through so that you know it's going to be a really solid calculator for you to use so that you feel confident about buying those deals. So just hopping into the spreadsheet right here, we have some areas that you can fill out and some areas that will auto-populate for you. That first one would be the purchase price, and I'm actually just going to go through the exact cost of my first property. So I had closing costs that I actually got the seller to pay a lot of because I offered with a closing credit. So even though my purchase price was $525,000, $7,000 of that was a closing credit. So my closing costs were $10,000 total, minus that $7,000 closing credit, which got me to $3,000. Now, if you want to understand what closing costs might actually be, I would consider speaking to a lender because it can vary from area to area. I've had them as low as no money with the credits, and as low as like $3,000, $4,000 in some areas, and some up to $10,000 to $15,000 depending on the type of property that you're buying and the type of loan that you're receiving. Now, the repairs part isn't necessarily that important for your cash flow calculations, but this will be important to see your cash on cash return that we will see at the end. And that essentially just means how much money you are putting into the deal and how quickly you can receive that money back. So let's just say it was around $30,000 and a down payment of 3.5% because I house hacked this property, which I think is the best way for you to buy a property, and I talk about often. And at the time when I bought this property, I had a 4.125% interest rate, and I was going to be buying a duplex, which is what I bought. So I had a 4-bedroom upstairs and a 2-bedroom downstairs. So I rented out the 4-bed and I lived in the 2-bed. I got $2,400 a month in rent from the 4-bedroom, and I actually got $1,200 a month from the unit that I lived in because I rented it out to a roommate, plus my girlfriend was living with me. So I had about $3,600 in income while I was living there. And then all of these auto-populate, and they can depend on your area. So we have repairs and maintenance, vacancy, water bills that you might have to pay for, or other utilities depending on how the house is set up. Insurance costs, I find typically $150 is actually a pretty fair number to utilize. And then other things that have come up in various areas are pest control. So I think it's good to have a slight budget in there as well. And then you might have your private mortgage insurance, which for me on this property was about $280. Again, speak to your lender and they'll give you a good understanding. The higher your loan amount, the higher your mortgage insurance will be. And then property taxes, also you can find that out when you go look at these properties on realtor.com or Zillow, or your real estate agent should be able to help you get a more specific number, or you can look at property records to see what the person was paying last year. There's a bunch of good resources to do that. This is just a good place for you to put all of that information down at once. So also the last expense that we have here, other than our mortgage and the rest of our debt that we have, and adding that together and also getting rid of the income that we received of this $3,600, would be capital expenditures. And that's just saving for something like the roof being broken over time. It takes about 25, 30 years for you to get a new roof. So you want to save a little bit every single month to put towards that. Plus other big things like a furnace replacement, siding, windows, just those large things that aren't typical monthly expenses, just like if you had a typical monthly expense of a repair or maintenance, like a leaky toilet or something. So this shows right here that you could have some cash flow while actually living in the property, which was the case for me, which was pretty cool. And then if you weren't living in the property, you could run the numbers again, and I ended up getting $1,800 a month in rent while I moved out, which was pretty cool. So I started receiving some cash flow. And then actually I ended up raising the rent of the other tenants because they were Section 8, and Section 8 wanted to give me a $480 a month increase. So that was pretty cool. But back to the actual calculator itself, this cash flow number per month is what we end up with to see how well this property will perform on a monthly basis, which is obviously very important. You do not want to be in the negative, you want to be in the positive. There's no point just to buy real estate so you can say you can have it. There's a lot of amazing levers that real estate creates in terms of building your wealth. You have cash flow right here, which is a very big one. You also have property appreciation. You have people who are paying down your principal every month, aka paying your mortgage. Your tenants are doing so, and it is lowering the amount of debt that you owe that you were able to buy the property with. So you're able to leverage debt to buy the place. Someone else is paying it down, plus you're receiving profit for having this property. So all very cool things. So back to the cash on cash return. Actually, before we get there, debt service coverage ratio. This is pretty simple. It's just letting you know that the amount of money you are receiving is covering the debt at 1.5 times. And there might be some metrics that your bank might need you to qualify for in order to get a loan. And sometimes the income that you are getting from the property will help you qualify and add towards your own debt to income levels. So that not necessarily is an important factor for cash flow analysis, but something that is good to know. And lastly, here we have our annual cash on cash return, which I spoke about at the beginning. So given that we did $30,000 of repairs, had $3,000 of out-of-pocket closing costs, and had a roughly $18,000 down payment, that means personal cash contributions were $51,000. And once we've moved out, we get about $13,000 a year. So that will yield a cash on cash return of 25%. Which is very high, and I was very impressed I was able to get this type of return on this property. This property today for me calculates and gets about $1,400–1,500 a month in cash flow, and that's real cash flow, not just rent minus mortgage. That's with all expenses taken into account. I was able to refinance the mortgage down to 3.375 and also increase rents more. So those things just keep building on one another. And there's also, if you ended up selling with a partner or had partnership with you, then these are some key assumptions, but that is not necessarily as important in looking at internal rates of return. But what's most going to be important for you to feel confident about buying a property in any type of economic market that we are part of is the cash flow numbers. So this will just help you quick and dirty see a property, what the purchase price is, and you already have a good understanding of the rents because you have figured out how to do that, because you have a good real estate agent who invests themselves and was helping you to figure out that kind of stuff, or you're well in tune with your market, or you've used various tools like Rentometer, which can be an okay gauge, or gone onto websites like apartments.com and pretended to just rent apartments to see what the going market rates are. So those are a good way to figure out market rates, and this is a great way for you to figure out cash flow. And people can use this calculator and then just feel confident, because people often look at a property and don't really understand all of the costs associated. But this will allow you to just feel confident about buying that property. So hopefully you really enjoy this spreadsheet, and it can help you buy many, many more real estate deals and gain that passive income and escape that 9-to-5 job that you're hoping to escape and achieve financial freedom.